What's up? Good morning. Good evening. What are we all up to? Smash up the thumbs up, guys. Hit the like. Thanks, Fred. Appreciate that. Hey. Yo. DC Woodworking. Went oversold so fast. Did we have more room to go up? Let's have a look. Let's Mars, what's up? G'day. Sorry I'm an hour late, guys, but here I am nonetheless. I've already got 12 people checked in, so what's happening? Maybe I'll just dive straight into it and they can catch up later if they wanna watch. So I think a really good idea would be to start from a bird's eye view. Let's just figure out what the hell is going on. Bird's eye. I'm gonna hide these. I'm just gonna hide everything really, except for the price at this point, even the TA. What can we see here? First things first, I think since all-time high, obviously, I mean, this has been the case for many months now, we've got macro lower highs. That characteristic has not broken yet. We have still got lower highs. It's looking good for the fact that it seems to be, you know, curving down. But remember, the thing that defines a downtrend is the highs. So the highs that I'm specifically looking at here, I mean, if we zoom in, this is the weekly chart, remember? Well, this is our first step. We need to get above that to start getting bullish, right? But I think the next two tiers are going to be a lot more meaningful as far as, you know, where we are. So think of it like hurdles for getting back up on top of the market. What's up, Jack? Yo. Now these levels are, we got, I mean, it's quite clear. It's 18.4, 21.5, 21.450 roughly, and then we got 25.1. Those are the three major hurdles we have to break to really consider ourselves changing direction. So what we want first up is a change of character, because our character has not changed this whole time. Ever since the all-time high, character has pretty much stayed in a downtrend. So to break that character, what we need is a high that goes higher than this level, then this level, and then this level will really confirm that change in direction. Now, not only do we need to break the highs, but to sustain this trend of possibly moving up, what we need to do is break and then back test and hold higher. So that's the second sort of recipe here. So we've gone, like, when we get to that point, which will happen at some point, but when we break these highs, when we break that, okay, cool, check, we've broken the character, right? But then what we need to do is maintain the new trend. So a downtrend is defined by the highs, but an uptrend is defined by its lows. So we need to maintain higher lows once we've broken through this structure. Okay, so that's the overhead. You know, even though the last, you know, 3 or 4 days has been really bullish and exciting, right? It's but a blip on the map of the overall market, right? We haven't really made that much progress. We're still in a very much in a bear market. You know, I think until we get proven otherwise, until we're proven otherwise, we could be dealing with this for many months to come, right? That could happen, and we have to be prepared to sit through that. Fred Gonzalez, thank you. Appreciate the support, mate. And it's always a pleasure. You're most welcome. Very kind of you. So yeah, that's basically that's the long and short of it, right? That's what we're dealing with. So we know that we've set in a low so far. This is the lowest point in the market since the all-time high. This line right here, right? So we know that is our current market floor until we see otherwise, you know, like until price breaks down below that, that is our floor at the moment. So you can see, compared to previous ranges, right, we are very tight. We're getting tighter and tighter squeeze. So let's do a bit of a range comparison, if that's the case. And delete these. And I'm going to grab a parallel tool. And I would say this is the range we're currently in. Let's get this parallel. Something like that, right? Range number 2 was our June low. Pull it across and then bring it to the maximum height, which was roughly up here. I do like to get things perfect, so bear with me. Yeah, there we go. That's range 2. So we were in this during you know, June, July, August, September, October, and then the FTX thing happened early November. So we were in this range for quite some time. Like this was starting to look like a crypto winter of sorts, right? And then we had this big old range up here. Let's snap that to there. Actually, this has to go sideways like this. How was I doing it? Oh, that's it. We'll bring it up here like that. That across there, lock it, get that straight. I think that's it. Anyway, you get the gist of it, right? So that is range, well, yeah, let's take it to there. That makes sense, I think. And then, yeah, that I guess that's pretty much it as far as the ranges we were bound by. Now this range here, I mean, this technically, yes, this was a range 2. Let me just quickly draw that up. Something like that. It didn't last very long. But we were trying to establish a range at the beginning from this low. Right? You can see the points that define the range and then the point that we lose that range. So either we're inside of a range, like technically we did break up above this range over here. See, the range existed here at that high, and we actually snuck up above it briefly for like three weeks, give or take, right? And that was our only brief little glimmer of hope for getting out of this bear market alive, you know, like unscathed. But it was met by further downside, and you know this was what really sealed the deal. Let me get the cross. It basically, the range lives until it gets broken, right? It can also operate as resistance as well. So you can see here, let me go down to the daily chart now. Now that we've defined the ranges, I'm going to lock that. I'm going to lock that. Sorry, 1 second. Someone's using power keys right outside my door, so I'm just going to close the door. 1 second. I'll be back. All right, that's better. So, yeah, these are our ranges. Let's get a bit of context here. Let's zoom in and see what's going on. I just want to make sure they're all locked, so I don't accidentally move them either. All right, so daily chart. Let's get a bit more resolution on the situation. So, bottom of this range is what we're currently dealing with. Let's extrapolate that out this side, or project that, whatever you want to call it. It's something to that effect. You could technically say it's more up here because there's more examples of price activity at this level here. You know, you get a bit more wicks going through it. You get some more activity off that line when you bring it up to this level here, right? So there's 3 major kind of bounces at that price level, and I'm pretty sure that's what's giving us the grief at the moment. We tried to come up and break it, break back into it, and on top of it, back in what was that? The 14th of December there, but very resistant. We broke back down again, and this ended up being a really nasty doji candle, which is a very bearish candle. Very easy to see that how, like, I mean, I wish I sort of was focusing a bit more. I guess I got caught up in a bit of the CPI excitement, but the following day was probably a really good opportunity to enter a short, like right here. And then, as that day closed, it's a huge bearish engulfing candle, right? So it's telling you very clearly that things are going to head down on this candle. Like, this candle is going to be most likely bearish, right? But the cool thing is, the optimistic side of this is that we've pulled in a higher low structure. So we double bottomed here. Let's get a bit of a line happening there. So that's roughly where the double bottom lives, right? And yeah, this is our range right now. So we are range bound. The good thing though is that this range is very tradable. Like, not just for Bitcoin, but especially the altcoins. The altcoins love it when Bitcoin finds stability, because then people come out of Bitcoin and start, they have the confidence to go into alts and play around in the alts. And that's kind of what we're seeing at the moment. So yeah, that's the daily outlook there. Now, a really good indicator that I want to show you guys is the EMA cross indicator. Now, if I go back out on the weekly chart, show you why that is. So this is another way to sort of get confirmation on like what kind of market we're dealing with. You may have heard the term death cross before, which is something like this, where you get a fast EMA crossing below the slower EMA. Now, my EMAs, for anyone that wants to follow along with this indicator, are set to 9 for the short EMA length, and then 26 for the longer EMA length. So we'll close that back down. I've got the third and fourth EMAs turned off, but this particular indicator lets you have 4 EMAs going at once. So it's a very good one. Anyway, back to the point. So to put it simply, like using this method, defining a bull and a bear market is quite easy. When you've crossed up with the EMAs, you define that as a bull market. When you cross back down, you define that as the start of a bear market. We had a very bizarre year in 2021 because we started to look like, we were getting the beginnings of a bear market because of the death cross. Not only on these EMAs, but there's another bit. Not too many weeks later, we got that huge surge in price, and the bull market basically got brought back to life, and we had this secondary push, or like a brief drop in the connection there. So, can you hear me? I think you can. I think you should be able to hear me. Anyway, yeah. So, bull market, when you've just had a green cross, right? And then bear market starts at the red cross, like the death cross. So the nickname for this one here is called a golden cross. And the nickname for this one, the red, is called death cross. I know I'm really like over explaining this, but I want to really like drive that home for you guys. So we got golden cross and death cross. Now, what's the most recent thing that's happened? Well, it happened quite a while ago, but we're still in the grips of this death cross here. This secondary golden cross is very abnormal for a bull market, by the way, to like change its mind and go back up again on the weekly time frame. But yeah, I mean, we've had an example of it now, so that's the thing. As charts get more history behind them, we can, compare, like, when you've got more data to go back on, you can get a bit more perspective in future setups that are similar, right? So yeah, that's pretty much where we're at on the weekly, is that we're not quite there yet. We need to curl this EMA up, and it needs to cross this orange line, which is the slower moving average. And then, that's when you'll get your golden cross, which is a good signal that, the weather has changed with the market. And by the way, you can have the bottom of the market in well before you get the golden cross. So just as an example, this could be our bottom. We may have seen the bottom. It's quite possible. So that's cool. That's all very well and good. We know that we're in a bear market as far as the weekly chart is concerned. On the daily, though, this is where things, this is basically the swing signals. You can take swing trade positions off this time frame. So right now, we've just done a golden cross on the daily. So things are looking optimistic there. And we're sort of waiting on the sidelines, waiting to see if this is going to hold this trend. Now, as far as, let me just get the events list up. Okay, so these are the key events that are coming up. And, down on the hour chart, it's a different story again, We're still dealing with an hourly golden cross. We have not broken that yet. You can see the EMAs are curling back down. They want to, they are threatening to death cross, but we haven't got it yet. And the cool thing about this indicator, by the way, is if you do get in on a golden cross, it'll keep you in the trade until it gives you the signal to sell, which is the death cross, right? So this would have kept you in from an entry around here and capture all of this profit climbing, and it's still active, this trade. If you entered here hypothetically, this trade would still be active. You know, you wouldn't have been shook out by this pullback. Only when you get that cross. So, yeah, really awesome strategy. Amazing. It's so simple. You know, that's all. It doesn't have to be complicated, right? Now you can fine tune these EMAs, by the way, with different lengths. If you want to get signals a little earlier, you can reduce. So see my blue EMA here is the short one. So if you make it shorter, you can see it tightens up to the price. It tightens up real tight to the price action. So I had it on 9. I like 9 and 26. I'll explain that in a minute. But 9, 26. So you can actually dial this back to say 20 and bring this up to 10. And you can see it can change the signaling. So if we go back to, let's see, 5. Look at that. We've already got the death cross almost. Or we have, if you had it on 5 and 20, right? Or if you tighten this one up even high, like tighter, let's say you don't want to realize any of that drop. But there is a downside to doing this, by the way, to tightening it up. And that is you get a lot of noise. Look at all this signaling here now. This in and out, in and out, in and out. So the benefit to having them set up wide, so I like to have it at 9 and 26, which I will explain, is that it keeps you in a trend and there's less noise between signals. So there's a lot more confidence and conviction behind a golden cross when it's set up this way. Obviously, there's moments where it switches, it changes its mind, it gets mixed signals. That is essentially what happens during a ranging market, and you don't want to be trading a flat ranging market anyway. So you want to see that volume pick up, and you want to see a big expansion, and you want to see those EMAs spread apart. See, when they're when they're tight and doing this, they're double helixing almost. That is disgusting for trading. You don't want to trade in those conditions. All right, so let me explain why 9 and 26. Why the hell are you going for 9 and 26? And it's to do with Ichimoku. So the Ichimoku indicator is made up of the Tenkan-sen and the Kijun-sen lines, which are these, I've got them as the same colors here. So we've got green and orange. Now you can see we have now the nickname for the cross is called the TK cross. So a TK cross will cross up for a bullish scenario, and it'll cross back down for when it's getting bearish, right? So if this Tenkan-sen line crosses back down below the Kijun-sen, that is the sell signal. See how it's similar? Now the period for these lines are 9 and 26, so that's pretty much what I've used to sort of set up my EMA cross indicator. Now I was using this for scalping earlier. So last night I was looking at a couple of trades. I didn't trade them for real. I just paper trade them because I wanted to test the strategy out, right? I was looking at Solana. Delete this and I'll explain it. So on Solana, we've got the tool on a 1 minute and 5 minute. So if you look at the 5 minute, we've got a bullish cross here, right? So that is basically all systems go on the 5 minute. So now that we know at this point in time we had a golden cross, we can go back to the 1 minute chart, find where that line exists here, and then we can say, hey, let's look for entry signals on the 1 minute. So here's one here. So we know that we're protected by the 5 minute. We haven't had a death cross yet on the 5 minute. So this trend is still healthy. And you know, the idea would be enter. Basically, you know, you can enter like technically on the creation of the golden cross, or you can wait for a back test. So waiting for a back test of price to find support on the EMA is a good signal that the trend is healthy. So in this case, let's say we did get in after the back test. You know, we found evidence that it's holding that EMA as support. We would enter here and set a stop loss, generally speaking, below the previous swing low, but in this case, it's quite a long ways away. So you may not want to take that much risk. So in this case, I would have, you know, I mean, it's kind of easy to say you would have set it below this, like, but you want to set it into an area where you're not going to realize a whole bunch of loss because you got stopped out. So you want to keep your stops tight, but you don't want to keep them too tight because it'll push you out of the trade, and you don't want that to happen. So so let's say, yeah, entry here, and you want to give the stop, you know, some distance from the slower moving average. So maybe like, you know, down here, or, you know, if you can see a previous pivot, I know it's far away, but technically that would be where you put your stop, just below that. And then, yeah, that's your entry. Now the idea would be that you would stay in this until you get a death cross on the 1 minute chart on these EMAs. And that would be your trend. That would be how you enter and exit trades. Now, no trading strategy, or as far as what I've come across yet, produces signals that don't require you to set a stop loss. You know, I think pretty much every strategy requires a stop. No strategy is bulletproof. Otherwise, we'd all be rich, right? Everyone would know about it. But yeah, like, technically speaking, like, if you want to even be more safe, you're unsure about, you know, this back test here, like you weren't convinced, then you could technically wait for a retest of this EMA here, the orange. But yeah, I mean, just play it as it comes. Now, another way, like, technically you don't have to go and get confirmation on the 5 minute for a green cross. And you can see this is actually playing out nicely, this trend. So you can play just the 1 minute and ignore what's happening on the higher time frames. Just focus in on what's happening. I mean, it is better to be aware of what's happening on the higher time frames to keep you know, to keep your trend direction in check, because you don't want to be trading against the trend. In most cases, it's better to trade with the trend. But yeah, like, look, down on the 1 minute, we had a golden cross here, a nice pullback, and we set in a higher low. So that's like an indication that this pivot here, that we have not only broken structure with the previous high, which sits there. There's the previous high, right? We came up and like sort of double topped. We pulled back and then we broke the structure right here on this really explosive candle right there. So that would be like your little signal. Okay, we've changed the trend here from down to up. So we're pretty committed to this uptrend here. You know, and you could have even gone long. Now, another really strong confirmation was the back test of previous resistance here, the resistance, yeah, becoming support here. So that was a really big confirmation that this trend is healthy, right? So that's what you look for. It's like a combination of market structure and these moving averages. So if you have trouble, if you have difficulty with identifying market structure, that's totally fine. Just, you can use the what is it called, the zigzag tool. Now, a really good one that I like using is the Zigzag Plus Plus, and I'll show you what that looks like. I've got it in my favorites list, I'm pretty sure. So Zigzag Plus Plus by Dev Lucen. Turn that on. You can see it. Let me just turn the defaults on, because this is what it looks like when you just open it up out of the box, right? Reset. Okay. So it's basically depicting the highs and the lows, right? I just prefer to clean it up a bit. So I go in here, I change the depth to 5 to make it a bit more sensitive to price action. Deviation can stay at 5. I change the color just to white and white. And I uncheck repaint levels, I'm pretty sure. Yeah. And then in style, we'll turn the labels off. We don't need them unless you prefer them. And yeah, that is our zigzag tool. That helps you sort of identify where the lows and highs are and the direction of the market. So, but yeah, if you feel confident, you know where the major pivots are. You know you can pretty much see them. There's, you know, just draw trend lines, or not trend lines, rather, lines of support and resistance at those pivot points, right? And then you can see what kind of traffic you have ahead as far as resistance and support is concerned, right? So right now we can see why we pulled up where we did here, right? Just look left. Look right there, bang, resistance, bang, area of resistance. So it was almost expected that we get a reaction off that. It doesn't mean the trend is over. It just means we've got, you know, a bit of a pullback. We have to wait to see if we're going to break through that level of resistance. Hopefully that helps, guys. It's a good way to sort of get a feel for the market, and it works on all time frames. It's not bound by time frame. So you can use it for swing trading, you can use it for investing, you can use it for, you know, scalping on the 1 minute. Yeah, it applies to every time frame. Nice volume on Doge, 1 minute. I'm gonna have a look at Doge. I haven't looked at Doge in a little while. We're up to 7.7 cents. Really cool. The last hour has been a nice 2% push up. So that was the first candle of the day. What a nice way to welcome in the day. So we see the high to beat. It's broken structure. It's changed character to a downtrend because of this. We've got lows, low, low. Oh, wait a minute. We broke that previous low. We got lower. So that's now in a downtrend. There's the top to beat. If we pull back here, that would be a lower high, which is a confirmation of the downtrend, like of a downtrend happening. So with any luck, fingers crossed, we can get a continuation of this trend. We can, you know, get back up on top of things and break through that high. We need that structure break to change the character back to an uptrend again. But otherwise, yeah, be careful, guys. I mean, it's in a golden cross on the 1 hour back here, so that has not broken yet. It pulled back pretty healthy, but yeah, it has not crossed back below. Now, to get a bit more resolution, you can go down the time frames and really capture, you know, the entries and exits and snipe out the best entries and exits, especially on the 1 minute, right? Look at this beautiful 1 minute trend here on Doge. Excellent. So, bang. If you see it laddering like this, where the candles are just, and there's no wicks to the bottom side, and you see the EMAs really spread apart, that is a really bullish sign. And what I would do in that case is just take a position as early as you can. You know, you want to get in as soon as you can, and set your stop below this pivot point here. See that little low that we had? Because if you break below that low, if price was then to do that, you wouldn't want to be holding a long trade, because that's That's basically a change of direction, and it's continuing this downtrend. But the cool thing is we held. This is where we found support on the first pullback, the first major pullback there on the 1 minute. And now we're just riding the EMAs. So you would still be in this trade if you entered off that green signal. You have captured all of this. And you don't get out until you see the EMAs cross and do a death cross. Now another cool thing about this indicator, if you don't have the patience to sit around and just look at a screen all day, and you just want to know when to get in, like you want an alert, right click on the little cross down here and go add an alert on EMA cross, and then this little window will pop up on the 1 minute chart, and you want to know when the cross up happens. So you select up, cross up, and you can do it once per bar close, so it'll do it every time. It'll do it every time there's a green cross up, so you'll get notified. And then, yeah, pick your sound. I like the chirpy sound. There's a fault. Whatever you think's gonna draw your attention. You can have it going for a minute to wake you up out of bed if you want. But yeah, I've got it 5 seconds chirpy. It alerts on my phone as well. So if I'm not at the computer, I can get that signal. And then yeah, you just hit create, and then it'll sit here in your alerts. So you see I have one set up on the 5 minute Solana chart for when EMA is crossed up on Solana. If I hit play, see you only have one alert per when you're on the free TradingView account subscription. So yeah, one alert. That's an example of setting them up just as a. But yeah, let's just assume we got in on that signal. Yeah, let's say we got in late. Actually, we got in on this candle here. This candle close, which was 2 closes after the signal. Wait, 1, 2. Yeah, let's say this one here. Now, our stop loss would have gone just below the swing low here. So if you stop out, that's a 0.38% loss. So not that dramatic, depending on what kind of leverage you're using, which you shouldn't be using too high of a leverage if you're still learning. And then, yeah, just drag up. See, with this method, you're not targeting a risk to reward ratio. You're just targeting the EMAs crossing back down. So this strategy is only really needed for entry and stop loss. Like, that's the only thing you have to really be concerned about at the start of the trend. But yeah, this thing could just keep going until we get that EMA cross. We're still in the trade. We're still in the long. So you can see here it's come up as high as 2.3% in a matter of how many minutes? That it only took like an hour and 20 minutes to get up there. That's really good. If you're using leverage in a decent size, bag, you do the math. It's there is potential there. Anyway, I'll leave it there for the EMA cross. By the way, if you want to find that indicator, just type in EMA cross, and it's by this person, d.mark165. I'll type that into the chat for you. So EMA cross by d.mark165. One with 841 users. So now the way I have it set up, I go 9 and 26. Don't worry about the others. And then I have my colors, EMA1 set as blue, EMA2 set as orange. I turn off the other two See if I had them on. Those are the other ones. Now, I want to get little indications down on the bottom of the screen here when crosses happen. So we've got cross one, green and red makes sense, right? Long and short, or buy and sell. And then you can turn off these two because that's the other EMA group. And that's basically it. Remember, if you've tweaked anything, save as default so that you don't have to set it up every time you turn the indicator on. So that's the default settings that I've got it at. That's my new default. Now, I guess with this EMA cross, like another way to use it is to turn these on too, right? And make these perform as your 5-minute EMAs. So now in this case, the fast one is the blue, the slower one is the pink. So if we go to inputs, we want to adjust this. So if we have a 9 on the 1 minute, what does that mean on the 5 minute? So you just go 9 times 5, which is 45. And then you've got a 26 period EMA times 5. 26 times 5 is what? Quick maths. 26 times 5 is 130. So now, if we go back into the settings, we want to turn on this. This is the crosses. Now we want to change the color here. I'm just going to put them as white. And instead of circles, I'm going to put crosses. And now we know, okay, we're on the 1 minute, but we know that a 5-minute EMA cross happens here because there's a white plus, right? So that's like secondary confirmation that this entry was really strong. So you can track an EMA cross on 2 time frames here. We got multiple time frame confirmation. So here was a big cross down on the 5-minute, and this is where the 5-minute cross back up. So yeah, a really cool way to do that if you want to do that double confirmation way of trading. So I'm going to turn mine off though, because I'm not using that method at the moment. Yeah, that's pretty much it for that EMA strategy. Now Bitcoin, where are we up to? You can see I've got the Ishimoku clouds turned on at the moment. Right now it's finding support or trying to use the Kijun Sen line as support. So that's our baseline. And then we've still got a green cloud ahead. So it is still bullish. What's coming up soon? We've got Jerome Powell speaking. He's making a statement. He's the chair of the Federal Reserve, as we all know. So not too long after that, I think it's 2 days after, we get our CPI, our brand new CPI data. So those figures will come out. Now the forecast for that is 6.5%. So if we come anywhere close to 6.5% or lower, I would say if we get lower than that, that's going to be really bullish. Like the markets will react bullish if this comes in at, like, say, a 6.2 actual. But yeah, the 6.5, hey. Now, you've probably seen me open up the Trueflation website a few times before, but I'll just do it quickly here again. Currently, so Trueflation tries to measure inflation on a day-to-day basis. So day in, day out, they'll give a metric here. And as it stands right now today, it's at 5.7%. Now, if we go over to the the inflation rate table or chart, you can see our peak inflation back in June for the US was 9.1%. Pretty out of control, but The recent reading was 7.1%, so that's a big improvement. Inflation is still high, but at least with this Truflation reading here, 5.7%, that is on this trajectory, this white line, right? So that's our current reading is at 5.7% as of, what is today, the 10th of January. So this is as close as this chart can read to the 10th of January. And that would mean the government reading would come out here as a 5.7 if Truflation has any kind of accuracy, right? So the forecast for the upcoming CPI figure is 6.5%, which lives right here at this intersection. Now the forecast, we all know that the government report on CPI is 1 month behind. So we are here in time, but we're reporting on a month's back. So here, so that's why 6.5 is still on track for this, for this path, right? That trajectory there. So there we go, guys. It's looking good for inflation. Until we see, this would be somewhat of an indicator. If we see this start to curl up, that's when we could start getting concerned that inflation's coming back up again. Let me just look at it on a month time frame, or even a week. So in a week, you can see we have picked up a little bit. Let's get a bit of perspective. So we're chopping sideways at the moment with inflation, which is kind of concerning. We want to see it continue to decline, not go flat. So it has stalled a little, just under 6%. But yeah, so far so good. It hasn't picked up by any means. I think it would start getting really bad if we start heading above 6% again, because it means we're sort of undoing the work that we've done to get inflation down. Anyway, that's inflation. Inflation coming down is bullish. Inflation going up is bearish, because the Fed will tighten more and the economy will be tighter. There'll be less money moving around. Markets won't be as bullish, and that's the long and short of it, right? Anyway, I think that's pretty much the big points I wanted to drive home today. Was just looking at the macro perspective for Bitcoin, and just understanding that we are moving into a couple of key events, and that is Jerome Powell speaking, and then the CPI data coming up. So Jerome speaks in 12 hours time, so 12 hours from now. And then after that, 2 days and 1 hour later is the CPI. So we're really starting to close in on those key moments, those key events, right? But yeah, look, the Kumo clouds are bullish. This is the hour time frame. 4 hour. We've only just sort of started. We did a Kumo breakout back here, and we're heading up. Now on the daily, this is where it gets a bit scary. So yes, there's a little sign of optimism, potentially, and we've almost got a TK cross on the daily chart. But look at the resistance. Like, if you want to get a reason for why we're running into resistance right now, this could be very well the reason. This massive red cloud above us. So I think maybe just maybe, if we chop sideways in a range, we can clear the cloud by just, traveling sideways through it. Because I don't think it's a pretty big call to say that we're going to break up through the top of the cloud like anytime soon from here. So yeah, I don't see us getting through it like that. I mean, it could happen. You could never say never, right? Like, we don't know. We have to just play it moment by moment. But that's where things are sitting here. We've got a giant red cloud above us on the daily time frame. Let's look at the weekly. Weekly's even more scary, right? The good thing is that the cloud is starting to, you know, close down potentially. We might even get a twist soon, coming up in like, you know, later this year. But yeah, there is a lot of work to do before we can get back up on trend and into a bull market. There's a long ways to go. But yeah, guys, that's a bit of macro and micro TA for you. I'll have a quick look at other alts. So we got ETH. ETH is on trend still, very healthy. Gala, back on trend. It was looking a bit scary here. We pulled back. Wait, this is the 1 minute time frame. Let me go up to like the hour. Yeah, you can see this trend on the hour chart is by no means over yet. We had a golden cross all the way back here, and it's just been beautiful this whole time. No death cross, just totally keeping you in the trend. 15-minute time frame. You can see it's getting noisy with the signaling. So we've got a death cross here, but then it changed its mind. We got a green one again here. So yeah, just sort of get a feel for what time frame you prefer to trade on. This is good because you can just set it and you can almost set it and forget it. You can sleep on trades like this as long as you've got your stop loss in place and the trend is strong enough. Like your EMAs will keep you in the trade until they cross down. What would be cool is if there'd be a way to set up to sell your position when there's a confirmed death cross, and then maybe even set it up so it takes a position on a golden cross, right? That would be cool, because then you could just let it do its thing. And yeah, you'd catch some really awesome trends, you know. But yeah, you can see in the history of Gala here, like, it's been kind of noisy recently. Look at that. Look, that's disgusting. Look at all that. This is why you don't trade in a ranging market, guys. Try to avoid trying to make money. It's like trying to draw blood from a stone. You know that saying? It's just not worth it. It's better to just wait and be patient for, you know, volume to pick up and these lines to really go steep. You'll know that the trend, you'll know that it's good conditions when these EMAs separate and they go really steep on the screen, right? You want to be trading volatility. You don't want to be trading chop. Chop is disgusting. I think a lot of big players in Bitcoin, let's go to like the 4-hour chart, say, actually the daily's good, See these ranges, especially here. There's been a lot of people, like, especially I think Crypto Face said that he was not trading through here because it's too noisy. Like, there's not enough commitment to a direction. It's just noise. So sorry guys, there's a person using a power tool right outside, so my mic's gonna be playing up a bit. All right, power tool went off. I'm back. So a cool way to combine EMA cross, Ishimoku clouds, and maybe even smart money concepts, so that you can see like when you get a change of character or a break of structure, and then just, you know, take it down to a lower time frame. So right now, you know, from a 15-minute perspective, Bitcoin has broken down below the cloud. it's still on top of the 200 EMA. There's a big example of it. There's a good case for it finding support at that 200 so far and bouncing. The length of that wick is really nice example of like buying stepping in. Now we kind of want to be cautious on this time frame with Bitcoin because we have not got a Kumo twist yet. A Kumo twist is when the cloud changes color. So it's still red ahead. You don't want to be going long. It's probably, maybe better to look for short. Like you're a bit late to the short party. Like the signal was back here for a short actually. But confirmation of that short signal was when we got back behind the cloud, back underneath the cloud and could not break back up on top of it. So that, if you got short kind of late on the failed retest, then yeah, you may have caught this little move down here. Just as an example, right? But yeah, using these indicators in conjunction with each other could be quite powerful. Anyway, guys, thanks for tuning in. There's been a lot of you pop in today. Appreciate your support, as always. Got 22 likes on the board. Thank you. Appreciate that. 28 people. Yeah, not bad. We're still in the same ballpark as the highs lately. But yeah, I don't doubt when we truly go bullish, and you'll know about it. All the EMAs will start crossing on the high time frames. We're going to break through Kumo clouds. We're going to be, all that jazz, all that good stuff. Volume's going to be picking up. The movement per day on each daily candle will start increasing. So right now, what kind of days have we been getting? Look at this candle. This is 0.16% day, 0.39% day, so on and so forth. They've all been like, here's a 1% day. That was a nice day, but 1%, guys, like that's low compared to what Bitcoin can do and has proven that it can do. Like this was a 10% drop. This was a 10% gain in one day. Yeah. Hanging out for those really explosive days. And they will come. They'll happen. Or even better yet, like just a trend that stays healthy and does not get rejected heavily. Like this was starting to be built up. I was trading this. This is how I got stuck in Bitcoin stupidly before. Like I did the stupid thing of trading without a stop loss and I got stuck. So I got stuck up here. I'm still in that position, by the way. I'm holding a bag at about $24,000, but all's well. My liquidation is really far away, so that's my position line, and that's my liquidation line down here, which is $3,000, $3,050 roughly. So I've managed to get it below the 2018 low. It's below the COVID low as well. So yeah, pretty comfortable. I feel safe. The only thing that has to happen now is the exchange that I'm on has to stay strong and not collapse, and Tether USDT has to stay afloat and not collapse. Those two factors need to stay, and then I'm good. But yeah, I am kind of hesitant every time there's Tether FUD, I freak out a bit. But it has stood the test of time. It's come through a lot of FUD before in the years prior. So yeah, it's been around the block. I just hope they don't get smashed by some black swan event. Fingers crossed, right? Anyway, that's the risk we all play when we get involved in crypto. You've got exchange risk and you've got token risk or crypto risk inherent. But yeah, you got to risk it for the biscuit, I suppose. If you're not comfortable with risk, don't participate. Simple as that. Anyway, that's pretty much it for today. It was just going to be a short one. We've got a. I think we've just gone over an hour, so 1 hour 1 minute. And yeah, appreciate you guys showing up, showing your support. Thanks for tuning in. Hopefully this content was helpful. And I'll catch you on the next stream, likely same time tomorrow. Hopefully on time. All right, guys. Thank you. Take care. See you later.